Dan Geltrude, the founder and CEO of Geltrude and Company and author of the book, Dogs Taught Me Everything I Know About Business. Dan, good to see you. One strategy investors may have heard of is tax loss harvesting. Can you break down the benefits?
Sure. So if you have some investments out there that are not performing or you don't think are going to perform the way you had originally anticipated, now may be the time to sell that. You collect those losses to offset your capital gains. So that's what tax loss harvesting is about. Now, if you don't have enough losses to offset your capital gains, or I should say if you have more losses than capital gains, you get to carry that $3,000 first, $3,000 against ordinary income, and then you can carry that into the future to offset ordinary income. So it's all about managing your portfolio to see where you have losses, where you have gains, how you could offset them.
And so there's one other thing that you talk about as well, which is a wash sale. What exactly is a wash sale? Can you break that down?
So what people may be thinking, hey, now's a great time to sell a stock at a loss. I'll take that loss, offset my gains, and then I'll repurchase the stock. Not allowed. You have to look at a 30-day window before and after the sale, because that will negate the tax offset or the tax benefits. So the whole thing about a wash sale is to stop people from these quick sales and repurchases only for tax purposes.
What about Roth conversions? When does it make sense to convert assets?
Well, let's just back up for a second and talk about how a Roth works. Now, the whole thing about a Roth is it has after-tax dollars in it. It grows tax-free so that when you pull that money out, you are not paying any tax. So looking at what the rules are, when's the best time to use it? So it's really ideal when you know you are going to be in a higher tax bracket later on, so that you would get the benefit of taking that money out and not have to pay higher taxes. The same thing goes with if you're currently in a lower tax bracket. That's when you want to put those dollars in post-tax so that you get the long-term benefit of that.